We talked about momentum reversals earlier in the week. This is the momentum reversal strategy I developed a few months ago. We've added the don't trade if holidays function to it, use max daily entries input as well. And here is what this looks like. I'm still sending this out to all strategy access clients. And here is what it looks like today. It's had, we talked about earlier in the week, it had a losing streak. So Tuesday, this was Tuesday's trade. Remember, Monday was a holiday. So Tuesday had 2 losers. Wednesday had 1 loser, and today we had 1 loser. So since we talked about this, 1, 2, 3, 4 losers, and now we're on the 5th trade, and it's on a winning trade right now. Shorting this market, this makes sense. The market continues to get propped up, and then the truth eventually happens. And so we see this rolling over. The market is postured higher, and then it gets weak and rolls over, or if it sells off, then it rallies. And so any rally lately based on an overbought intraday condition gets taken back. So this is the momentum reversal. Here's what the equity curve looks like now. It had this drawdown, and this is a closed trade equity curve. It doesn't include the current profit on the current trade. It only includes the closed trades. And so you see it went through this drawdown. And I'm looking to add this to the portfolio. But if you take a look, for example, the 200K portfolio, here is what the 200K portfolio looks like as of yesterday, the end of trade, January the 19th. It's in a $20,000 out of nearly $27,000 drawdown. And let's see here. We're up on the week. And when you add this one strategy, there's 51 strategies. And so there's the risk to worst case drawdown here is about 6,700. But when you add momentum reversal 2022, put a 1 contract right there, you increase the risk to worst case drawdown by, you go from what it was to about 20,000. So you increase your risk when you add this strategy, because you know you're trading a strategy that has had some recent success. So you have to wait until the current portfolio recovers, and then this one goes through a drawdown. Or transitioning at an equity peak is also a potential opportunity to do something with this strategy. Once you hit equity peaks, or once the current strategy hits a drawdown, since you're not increasing your risk from your risk to worst case drawdown from 6,700 to 20,000, you add another $13,000 in risk to your setup by trading this. Just adding it. You could, if you got away with it, if you got in on a winner, if you got in after 4 losers and this thing ran up, you could do it. Could get away with that, I guess. But systematically speaking, you want to monitor your risk. You don't want to take too many risks like that, where you just jump into something. You jump from something in a drawdown to jump to something at an equity peak. Here is the ES. ES did better yesterday. Hit a profit yesterday. Capturing that momentum reversal again today. Again, I haven't updated the website with this, so I'll have more about this soon, but sharing this type of market condition. We've seen some wide-ranging reversals in all markets at the same time, so interesting market environment to take a look at, looking at applying this in other ways to other markets as well. So momentum reversals for 2022 will be on the website soon. I'll have more information. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.